Well, let's get some more on what to expect at the Open. Chris Weston joins us from IG Markets in Melbourne now. Chris, just looking at the leads, well, certainly the ECB, there's been a lot of hope that we are going to see some sort of detailed plan coming up, possibly at the meeting September 6th. Still seems to be a source of positivity for markets. And then on top of that, you had the FOMC minutes that the market seemed to embrace overnight.
Well, I think, yeah, the minutes were really the thing in focus last night. I think there wasn't so much rhetoric about the ECB. It was more about what was happening with Greece. Mr. Samaras coming out on the wires, really appealing to everyone and saying, look, give us more time. We're not asking for more money. We will identify 11.5 billion euros worth of cuts by the Troika review. Citigroup coming out with a note again, just reiterating their call. They say a 90% probability that Greece will leave the Eurozone, perhaps as early as September, October. Again, a lot of that will hinge on whether they can identify those deficit cuts coming through. But the minutes, I mean, the minutes were incredible. I mean, people have been positioned, I suppose, been pricing out the chance of QE in September. We'd seen that reflected in the bond market, with 10-year pushing up about 50 basis points from the lows of 137. But clearly this statement was a lot more dovish than what the market was looking for. You can look at dollar yen, it dropped about 100 pips pretty quickly. It's recovered a little bit from there. We did see treasuries giving up about 4 basis points on the 10-year, not too much of a move. And then gold had a lovely spike up to about 16.55. And you know, it seems to be holding that ground. So I think it's clearly the minutes were a lot more dovish than what the market was looking for. Bill Gross came out straight away tweeting to the world that he's now sees an 80% probability of the Fed easing monetary conditions in September. I stand by my call that I don't think that the Fed are going to be doing anything in September. I think they will extend their language. I think they'll change their language from the Fed funds rates being projected to increase or increase from from 2014 up to 2015. But I don't think they're doing an asset purchase program. But yeah, I think clearly the rhetoric that we've seen from them, the market has anticipated that this is pretty much a done deal. Capital Economics suggesting that was going to be the case as well. So yeah, really interesting calls. I think we've seen one really prominent commentator in the US coming out and saying to people that this is completely political, what we're seeing in the US. The fact is Mitt Romney will win the election and Ben Bernanke's going to lose his job straight away if that happens. And therefore Ben Bernanke's going to come out and do a QE program just so that he can try and install some confidence in the Obama administration. I think these are crazy rhetoric. Perhaps it's true. We don't know. But yeah, that's one of the prominent views out in the US at the moment. This is starting to get very political indeed in terms of how the Fed are positioning for QE going forward. But clearly, yeah, a nice pickup from the lows, and yeah, the market's still very much on tenterhooks whether we're going to get something in September from the Fed.
Just looking, I guess, at the Open then, what's the IG call for the ASX 200?
Yeah, there's not much in it between us and the SPY. I mean, clearly we look at you know, where fair value is and look at what the dividend payments are going to be coming out and the interest component as well, and make a fair value from that. I mean, yeah, we're expecting a modest open, slightly higher as well. I think you've got to look at BHP today. I thought the numbers were very solid that we saw yesterday. I think this is now a more simplified company in terms of their expansion. You know, people are looking at that internal rate of return projects that they're now focusing. They've got to be above 15%. Olympic Dam, Outer Harbour, obviously internal rate of return around 13%. So you know, they've been canned or shelved indefinitely at the moment. So I think this is certainly a big positive for the market in terms of their balance sheet flexibility, in terms of their risk profile. The market should like that. It doesn't look like it's going to open too much higher at the moment. I think you're going to see a pretty flat open for BHP. I think the ADR is predicting an open around about 3 cents higher as well. But today is all about earnings, Bridie. We've got pretty much every, you know, there's about 10 or so companies, big companies coming out with earnings. Fortescue, Qantas, Fairfax, all these different companies leverage different part of the economy coming out with earnings today. And we've got that Chinese PMI, the HSBC read, coming out a bit later on today as well. So I think, you know, clearly the material space is going to be very much in focus, and everyone again pointing to that iron ore price now at $104 per tonne, and we're hoping we're going to see signs of stabilisation in that iron ore price, given, you know, there's a lot of talk out there that the Chinese now can actually go to Brazil, given the rates of the shipping rates at the moment, actually get iron ore, good quality iron ore from Brazil, cheaper than what they can actually dig it out at home.
Yeah, it's such an interesting story, isn't it? So obviously a lot of results there, and we're obviously waiting for those to drop. We've got among them Qantas, Fortescue, Fairfax, a number of major stocks reporting today. It is a huge week. What in particular will you be watching for?
Well, I think Fortescue is going to be a really interesting one. Now, I think that, you know, the market's looking for revenue around about 6.7 billion. You know, net profits around 1.5 billion. But yeah, I think given the fact is the stock's hovering around that $4 mark, and considering how they're so sensitive to the iron ore price going forward, and the implications if the iron ore price stays around $105 to their debt profile going forward, we've got to have a look and hear exactly what their views are on the iron ore price going forward. We've seen some companies, some of the other miners talking about it should stabilise here around and gravitate back up towards the 120 mark, which would be good for Fortescue longer term. So I want to hear what their outlook is. I mean, that's going to be really, really important for their debt profile as well. You know, David Jones got a sales report. Don't expect too much from that. We're expecting a pretty flat quarter from them. I think in terms of Fairfax, they have pre-guided when they came out with their Fairfax of the Future announcements in, I think, June 18th as well. So not too much from those guys. Revenue should be down about 6.5%. It's going to be a pretty tough quarter tough half for those guys, given what we've seen from the SMI data as well. So we're not expecting too much. I think Qantas will probably be a really interesting one as well. Obviously, they've got balance sheet, they've got the valuation support coming through. Everyone talks about that. They've had that balance sheet support, valuation support for quite some time. But they have pre-guided as well, and you know, they talked about profit, their net profit between 50 and 100 million. So it's about the outlook commentary. We're looking for you know, views on yields going forward as well, and you know, the frequent flyer program as well, very much in focus, as well as when potentially any sales of non-core assets. So yeah, big day. I've got to keep my eye on BHP today and see if we're going to see it gravitate. And I really want to see it close above the 50% retracement at the recent sell-off around that $33.31 mark. If we get close above that, I think that'd be a very positive day for BHP and probably the overall market.
All right, something to watch there for us. Thank you so much for that, Chris. We'll chat to you throughout the session.
Thanks, Brodie.